Wait, traders. Do you ever ask yourself about volume and price in forex trading? This is basically what you need to know today. Let me start by defining volume and price in forex so that you can all understand. In forex trading, volume refers to the number of units or the quantity of a currency traded within a specified period. It indicates the level of activity and interest in a particular currency pair and provides insights into market dynamics. In forex trading, price refers to the exchange rate at which one currency can be exchanged for another. This rate fluctuates constantly due to various factors, including economic data, geopolitical events, market sentiment, and supply and demand dynamics. Price and volume are the bedrock of all trading strategies, indicators, and tools. While most traders possess a solid grasp of price dynamics, they frequently overlook the crucial role that volume plays in the market. In today's video, we will delve into the concept of volume, exploring how it operates and how we can leverage it to identify more reliable trends, effective breakouts, and potential reversals. With the foundational understanding of volume now established, let's proceed to an illustration that will deepen your comprehension of how volume can enhance your trading analysis. For example, if we're looking at a daily time frame, it's the number of shares that got traded during that day. If we are talking about cryptocurrency, it's the number of coins that changed hands in a specific time period. And if we're talking about forex, it's the number of currency pairs that changed hands in a specific time period. So now let's take a look at how volume works. Well, first of all, to open up the volume indicator in Tradingview, we go up here to the Indicators tab, and we simply search for volume. We have a few different volume indicators here, but in this video, we're going to use the standard volume, which is pretty basic but very powerful. So we choose the volume indicator right here. The volume is represented by vertical bars, and the height of the bar represents the amount of volume. So when we have tall bar, for example, right here, that means that we have a lot of volume. And when we have small bars, like, for example, right here, that means that we have relatively low volume. To see the exact amount of volume, you can hover over a specific candle, which in this case is a specific day. For example, during this day right here, Tesla had a volume of around 447 million, while the previous day had a volume at around 168 million. And the day before that had a volume of around 69 million. The color of the volume bar will be the same color as the candle. So if we have a green candle, meaning that the price have increased during the day, we will have a green volume bar. And if we have a red candle, meaning that the price have decreased during the day, we will have a red volume bar. When we have a green day, you can think about the volume as how many buyers are supporting the move. Or in other words, you can think about it as buying interest. However, when we have a red day, you can think about the volume as how many sellers are supporting the move. Or another way to think about it is selling interest. So for example, when we have a green candle supported by lots of volume, this is very bullish because not only is the price going up, but the price is going up while at the same time being supported by lots of buyers. Let's take a look at how to use volume to improve our trading and improve our win rate when it comes to trends, when it comes to reversals, and when it comes to trading breakouts. And guys, let's start here by taking a look at trends. So right now, as I'm speaking, I'm looking at a forex chart. I'm on a daily time frame on the Euro USD. And as you can see right here, we have an impulsive move. And then we had a pullback, which is a move against the direction of the trend. And then we have a next impulsive move, and you can actually use volume to determine the strength of the trend. So is this right here a healthy trend or is this a weak trend? And in an uptrend, what you want to look out for is that during the moves up or during the impulsive moves right here, you want to see an increase in volume. And as you can see, when the price went up, right here, we saw a strong increase in volume. When you have an uptrend and the price is pulling back, like for example, right here, what you want to see is that you want to see the volume decrease. And as you can see, in this case, when the price started to pull back, the volume bars got smaller and smaller and the volume decreased. And then when the next impulsive move to the upside started here, you can see that the volume slowly started to increase once again. And this is exactly what you are looking out for in healthy uptrends. During the up moves, you want to see lots of volume. And during the pullbacks, you want to see decreasing volume. And the exact same principles can, of course, be used in downtrends as well. Now let's take a look at how to use volume to find better reversals. And what you always have to have in mind when finding reversals based on volume is the principle that the more volume we have, the more significant the move will be. So, for example, right here, we had a small uptrend. You can see we had impulse move, pullback, impulse move, pullback, impulse move. But what you can see is that during this red candle right here, we saw a very strong spike in volume. And this right here was a red candle. That means that many sellers supported the move. What you also can see with this particular candle right here was that it pretty much printed a bearish shooting star. And a bearish shooting star is a bearish Japanese candlestick pattern that indicates a potential reversal to the downside. And when you have a bearish candlestick pattern together with lots of volume, that basically means that many traders are agreeing that this is a valid bearish pattern, and it increases the likelihood of an eventual reversal to the downside. And you can see that in this case, this candle right here actually marked the end of the uptrend. But the uptrend did not transform right away to a downtrend. We actually transformed here into a trading range, but this was still the point that marked the end of the previous uptrend. And as you can see, eventually, we actually saw a strong reversal of the price. Another way to use volume to identify reversals is to look for divergences. And what do I mean by this? Well, a divergence is when we have the price going in one direction while the volume is going in the other direction. So, for example, as you can see right here, we're looking at the Apple daily chart. You can see that from this point to this point, the price printed a slightly higher high. But if you look down here to the volume, you can see that we have the volume going in the other direction and printing a lower high. It means that even though the price pushed higher, the move was supported by less buyers. And this right here is what we call a bearish volume divergence and indicates a potential reversal to the downside. And you can see that after this divergence, we started a corrective move here towards the downside. The third way to use volume to improve your trading is to use volume when it comes to breakouts. And this is super important. So when we see a breakout, for example here, I'm still on the Apple chart here. On a daily time frame, you can see that we saw resistance coming in not only one time, two time, but three time. But during this green candle right here, you can see that we got a strong breakout above the resistance area. When we see breakouts, we want to look out for two things. First of all, we want to see a strong green candle, which we saw right here. This is a very good sign for a breakout. But what we also want to see, in order to make the breakout even more significant, is that we want to see lots of volume. And why is this the case? Well, when we see a breakout, we want to see lots of buyers supporting the move. And in this case, you can see that the volume bar was massive compared to all the previous candles, and this increases the likelihood of this being a real breakout, and that we're going to see a continuation towards the upside. If we now take a look at this example instead, we can see that once again, we had a resistance level. We saw resistance coming in one time, two time, and then during this candle right here, we had an attempted breakout, but we had a few warning signs regarding this breakout. First of all, we can see that this candle was not really a momentum candle. It was not much larger than the previous candles and the other warning sign we had on this potential breakout. Let's go down here to the volume. You can see that the volume bar here was pretty much the exact same height as the previous volume bars. So we had many warning signs that this was not a strong breakout. And as you can see, just the candle after we saw a red candle, and this was indeed a fake out, and the price started to push down. So one of the most important tools to combine with volume is support and resistance. This brings us to the end of this video. Subscribe to this channel, like and share. Bye guys, I will see you in my next video. Listen traders, before you make any big mistake, like paying for that expensive course, try reading this book first. This is basically what you are going to be taught by your mentor. In fact, not even everything. If you are a beginner and you have learnt only basics, don't dare funding your forex account because you will not like the results. This book will introduce you to another side of forex trading because you cannot like forever buy at support and sell at resistance. This book comprises of everything you need to know about smart money concepts and price action, and everything is explained simply. Grab your copy at $10 only and it will save you from a lot rather than paying for those so-called forex mentorship. You can make payments via PayPal, Binance USDT, M-Pesa and Send Wave. Look for payment details on the description of this video. Send your receipt and you will get your copy. First come, first serve.